Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a failure at the 69.5 high volume node for a move down towards 59 to 61, which marks the bottom of the current short-term balance area. So the bigger pattern of yesterday's failed breakout resulted in a move down towards the balance area low. That was the main idea covered in yesterday's recap video as well. Now at this point, heading into the open, our short-term bias is going to be neutral bearish. So that means that we understand that the sell side is more dominant short-term, but at the same time, the market is set to open near the bottom of the balance area where responsive buyers can be active. So when the short-term bias is neutral bearish, we only want to take short setups either at good location, at resistance zones, or when there is overwhelming evidence in real time that the sellers are continuing to be dominant in real time and that we can continue to trend lower. So in order to short the market at the balance area low at 59 to 61, we need to see extreme weakness in real time and continued downside momentum. If we're seeing a lack of weakness or a lack of downside momentum at 59 to 61 or at 56.5 and the 2-week low at 57, then by default, responsive buyers can be active and we can get a move back up towards the 68 to 70 initial resistance zone. And sell side can be active on first test of the 68 to 70 resistance, but we do have to monitor the situation in real time in order to determine whether that is still a good spot to short, because we've already seen a response there in the overnight session. So if we're going up and we're seeing some decent upside momentum and the advanced decline line is trending higher and the other markets are also starting to rally back up, then although 68 to 70 is valid resistance, it doesn't mean that the zone must absolutely hold. We could break above it, we could fill the gap at 72.75, and then from there, as the market pushes into 76.5 to 78.5, that is a very good spot for sellers to be active. Same goes for 80.5 to 82.5, although it's unlikely that the market will go all the way back up to 80.5 to 82.5 on the day time frame today. So today we are going to give more edge to the sell side and we are going to be cautious on the long side, but at the same time we have to understand that the market has moved from 24.88.5 all the way down into the short-term balance area low here at 59 to 61, and that it is temporarily oversold, and for that reason we need to be careful shorting the market at poor trade location. And again, the only time it would make sense to take a short trade at this aggressive location is if we were seeing overwhelming signs in real time that the sellers are in control. So essentially, if in real time it was shaping up to be a trend down day, that is really the only time where it would make sense to take an aggressive short. Otherwise, if we're seeing a lack of downside momentum at initial support or at 56.5 to 57, then there's potential for buyers to step in. Now, in the event that we do get a continuation move lower, buyers can still be active at 48 to 50. That's still a pretty decent area of support, and the same goes for the July 14th lows at 44.25 and 42. We have an HVN at 41.25, and at that point you're really hitting a range extreme as well, and it's fairly high odds that buyers would step in for a pretty decent pop back up. So again, heading into the open, our short-term bias is neutral bearish, and that means that we have to exercise caution on the long side, but even on the short side, we have to either get good trade location or there have to be overwhelming signs in real time that the sellers are continuing to be dominant and in full control. So those are the main ideas heading into the open. Let's see how the buyers respond to 59.61 and the 56.5 to 57 area. That's going to tell us whether this short-term multi-week balance area is still intact, and we'll take it from there.